lines. We do have some managements lined up on the show as well, so we'll talk about that. Quickly, just taking a look at the Nifty, it's down 256 points. We have the
in terms of FY25 guidance as well.
In fact, we have Naveen Kulkarni who's joining us now to analyze these numbers. Naveen, good afternoon. Thank you so much for joining us. Well, you know, it looks like a miss, at least on the top line. Revenue has come at 8,730 crore rupees versus a poll of around 9,000 crore rupees. The volume growth is at 10% versus a poll of 8 to 10%. And what the management says is that there was some down trading and also price cuts. What do you make of these numbers?
Yeah, so clearly there is a miss on the revenue. So there was an expectation of around 4% kind of a price cut. So we were expecting revenues to still grow by around a couple of percentage points over the last year. So expecting revenues in the range of around 9,000 crores. But this is a miss of almost around 300 crores on the revenue. We need to closely look at the EBITDA numbers because EBITDA margins are important. So we were looking at EBITDA of around 1,900 crores. So that is a critical number.
The margins are at 19.4%, Naveen. The margins have come at 19.4%. What were you factoring in?
So we were looking at a higher number, more than 20%. So this margin number is also a miss on our expectations. So both revenue as well as there is a miss on the EBITDA. Considering, of course, the volume growth has been 10%, but revenues have been flattish on a year-on-year basis. So clearly, the margins seem to have been under pressure.
We also have Prakash Diwan with us. Prakash, you know, the margins that we were working with were close to 21.5%. So our colleague Mangalam was working with
on our consumers and keeping their interests at the forefront. Naveen, they have indicated that demand conditions were weak, there's down trading, then there are price cuts as well. What are you suggesting the outlook is from your end, considering there is a big player which has entered the industry? Do you think price cuts could continue, margin pressure could continue going forward?
So at this point in time, it seems likely that the margin pressure could continue for some more time. Because of the intrinsic conditions that we are experiencing, right? But of course, if the demand picks up, then the chances of a company like Asian Paints to charge higher prices is of course always there. Competitive activity, of course, we'll need to monitor that more closely as time passes. So we'll see how that impacts. But as of now, the case of margin pressure, I think, is likely to be there for a couple of more quarters.
Well, interestingly, you know, despite the weak set of numbers, the stock seems to have recovered from the intraday lows. Prakash, you know, one thing that we want to highlight, and Mangalam also made a note of this, that the company itself had indicated that the medium-term EBITDA margin guide.
More about stock-specific news and the outlook as well. Stay tuned.